Hey, if you need help scaling your multifamily portfolio, but you can't afford a full on acquisitions team, check out today's conversation with Spencer Vickers. Now, Spencer is the founder of the Fractional Analyst, and he helps small operators who are looking to scale their portfolio to step in with all of the things that they need in the acquisitions process. Maybe you need help analyzing deals. Maybe you need help with investor relations, putting together a pitch deck, working with your investor portal. Whatever it is, in that acquisitions process, Spencer and his team can help you out. So today we talk a lot about some of the things that you can do and how to professionalize your operations. So if this is something you want to learn more about, don't miss today's conversation right here on Multifamily Insights. Spencer Vickers started as an analyst in the industry, quickly learning the ins and outs of acquisition workflows for various asset types, and quickly identified a key gap for the smaller players that needed to compete with the big players for deals. Now, Spencer set out to do something about that and help those smaller guys compete by starting the Fractional Analyst to help smaller real estate buyers utilize analyst resources as deals require them without having to be full time. Let's welcome to the show, Spencer Vickers.
Glad to be with you, John. Thanks for having me.
Yeah, man, absolutely. Great to have you on. I went over your background at a very, very high level. Take 2 minutes and fill in some of those gaps.
Yeah, sure. So I started the Fractional Analyst just about 2 years ago in June of 2024. So coming up on our 2-year anniversary. Before that, I was the senior analyst with DR Horton's multifamily platform in Central Florida. And then before that, I was doing healthcare, real estate acquisitions and development for a group in Dallas. And then before that, I was with Invesco Real Estate on their US platform, doing all kinds of stuff, industrial, apartments, retail, things like that. So, multifamily has a very special place in my heart, and it's a big part of the clientele that we serve today.
I love it, man. You talk about Invesco, which I believe is they're like one of the big sponsors of the Broncos or something like that, right? They're huge, right? So
Yeah,
huge,
yeah, very
huge
very big
company.
platform.
Yeah, man. So huge companies you work for, worked on some pretty large projects. And when I read your bio, it talked about kind of that gap, right? The gap
Yeah,
between those big institutional players
yeah,
and more of those everyday investors like, many of our listeners. Talk to us about that gap.
yeah, absolutely. So I was trained in the institutional world, right, working with the big guys. But a lot of my work before I worked with those guys was with the small individual players, the individual syndicators, the small fund managers, the really small family offices, kind of things. And I guess what I noticed, and especially a big part of our work that we do at the fractional analyst now, is that those small individual syndicators or small fund managers, they don't have the same back office support that those big guys have, right? They don't have analyst teams, they don't have transaction teams, they don't have dedicated debt teams and all of this. So that's a lot of the gap that we fill is we come in and we help people get their back office set up. We get their models, we get their templates, we get their investor relations systems going. Just really build smooth systems that make acquiring and operating multifamily assets a lot easier than just figuring it out yourself.
So when we think of that gap, you talked about the institutional players really having resources, right? We're talking people and personnel, but you mentioned, debt terms. You talked about the modeling, the actual analyst or analysis of the deal. You talked about kind of templates, investor relations, all the things that's necessary to take, an operating or an offering memorandum, right? Getting that deal packaged up, sent to your inbox to actually putting in an offer and actually being able to get this thing across the finish line. That's really where you saw the gap. Is there one area in particular where that gap is more pronounced than others?
Oh, yeah. I think one of the big things that we see with new investors, new entrants to the space, is just not having those operating systems in place for once they actually acquire the deal,
Mm.
right? And knowing like, oh, well, I've got to submit monthly or quarterly reports to my lenders. How do I do that? I've got to report to my investors. How do I do that? Um, right? And who's my property management team going to be? I don't have contacts for that. So we help a lot with that setup process and making sure that people are set up for success once they actually go and acquire the deals.
No, having those operating systems is key, right? I mean, ultimately, when you're scaling into commercial real estate, you're running a business, and however you might have done your personal portfolio, that's simply not going to cut it when you're in commercial because I mean, your lender is going to expect a certain level of professionalism, reports, as you mentioned. Investors are going to expect a certain amount of reporting, as you kind of talked about, and having those systems in place makes it so much easier. Talk to me more about some of the key ways you help those smaller players, and it's all relative, right? But some of those independent mom and pop, family and friends type investors versus maybe what you're seeing on the institutional side. How are you helping those guys
Yeah.
compete and kind of run and operate more effectively?
Well, there's some great platforms out there that honestly cut down a lot of that admin setup from people having to do it manually, right? I mean, you can set up your own, uh, presentations or memorandums, and do things manually, and that's all well and good. But platforms like Cash Flow Portal or Juniper Square or InvestNext, they go a long way, and in helping people automate a lot of that reporting and compliance. At the Fractional Analyst, we're building Corecast, which is our operating system to help investors. Um, so there's a lot of great tech out there nowadays that ma- takes a lot of that manual process and automates it, or at least cuts down 80% of the work, and then you can finish the rest.
Let's dig in a little bit more here, right? Because for folks who have syndicated deals are probably completely aware of what you're talking about. But if it's your first syndication or you've only been on the limited partner side of that table, maybe you're not fully aware of some of those minute steps that go into it that are really important but take up a lot of time. So can you dig in a little bit more?
Yeah, one of our clients that we're onboarding this week, they are in the multifamily space. They've got, uh, I don't know, they've got maybe 300 units under management, something like that. So they're I'd say they're mid-sized, right? They've been operating for a little bit. They're acquiring new deals, but they want us to help them get set up in Cashflow Portal. And Cashflow Portal is a great way to manage investor distributions and investor communication. And it just means that you're not managing Excel sheets that uh, in between deals and in between entities that you've structured with your investors. It can get complex pretty fast.
Yeah, I mean, listen, the technology helps because, I remember our first syndication deal as the lead operator. Now, we did a few deals as co-GPs, but as a lead operator, I mean, you're on the hook for everything, right?
Mhm.
So all of the communication and the information management, man, it can be overwhelming. Not, I mean, first of all, you got the deal itself, right? All the contracts with the attorneys, with the title company, your due diligence, you got to manage all those documents and actually go through the process of confirming this property is what you think it is. It's performing at the level that you think it's performing. Revising your business plan, tweaking it, and oh, you know what? Hey, it's actually not going to be this many units renovated. It's going to be this many. So you got all of that. Then you've got the management of capital, which is, subscription documents. First of all, you have to have subscription documents. So
Yeah.
you got to get those documents, lined up. You've got to make sure all the right clauses are in there and that you're structuring the deal the right way. Then you've got to get those documents out to all your investors. You've got to make sure everybody has completed the documents correctly and signed those documents. Then you've got to store that sensitive information. And the
Mhm.
first time we did it, we did not have a portal. So we were doing everything through a combination of like Google Forms and DocuSign. We were uploading the documents in
Yep.
DocuSign, and someone selected the wrong form. It didn't, fill in the right things, right? So I had to pre-populate all that. So that took
Yeah.
forever. And then you got to store it all somewhere. So now you're going into, some sort of a Dropbox or box or whatever you're using, right? So man, it just became a lot to track. And then you have to manually handle the K1s, right? Because you got to go
Mhm.
now download all that information, extract it, put it somewhere so you get it to your CPA. So that could be a lot. And I'm not trying to scare anybody, overwhelm you, but I want to give some context of what Spencer's talking about. If you do a deal, let's just say you've got 20 investors. Well, that's 20 subscription docs, that's 20 K1s, that's distributions and 20 different bank accounts. You've got to make sure are set up. And how are you going to manage that? Is that a manual push? Is that automatic? So you got to set all this stuff up. And this is why a portal can be so helpful because you really do this one time. All
Mhm.
the information's there, and not just there, but when someone has a question, they can go log in and get the answers themselves, as opposed to having to call you to have you reconcile how many distributions you made, or hey, what was this, whatever the question is, right? So these things help tremendously when you're looking to scale. So we kind of talked about the portal side of it. Talk to me more about the fractional analyst, because I know obviously you do a lot more when it comes to helping people analyze these deals and decide whether or not this is going to be the right opportunity. So help us fill in more of those gaps.
Yeah, yeah, we can talk about acquisitions. Just
Yeah.
one more note I was thinking about. We just got through tax season with
Oh my
one of
goodness.
our clients, and it's a lot, right? Just like we've been talking about.
Yeah.
Uh, they're set up in Juniper Square, which is a more higher end system, but even that takes a lot of manual data entry and data validation and making sure that everything's up to date. And certain investors change bank accounts, right, in
Change
between
names,
deals and change
addresses.
names
Yeah.
and
Yeah.
addresses. Yeah, yeah. So it's a lot of upkeep, and that's a big reason why people bring us on is we we expand people's capacity so they can go focus on operating the deal, right? And raising more capital and growing their funds and growing their businesses. It's a lot of admin work that, frankly, the operator, if they can, should try and offload because they just have higher and better uses of their time.
So Spencer, let's say we got a listener who is using some sort of investor portal today. Okay. Where's the benefit of someone like you and the fractional analyst coming on board if they're already using that? They got a new deal they're getting ready to launch. They're in the very early stages. They just kind of analyzed it, or just got the OM. They like the deal.
Yeah.
They haven't, put together the pitch deck. They haven't even locked it up under contract yet. Where do you step in, and where does the value help us outside of the investor portal?
Yeah. So we can certainly come in on the early end of things. A lot of our clients bring us in once they've done a few deals, when they're trying to, go from, okay, I've done a couple, I'm ready to scale. But we do help a lot with new people too. Um, a lot of what we see people bring us for on the front end is the modeling to make sure that the model, one, is accurate, but two, is professional enough to deliver to their lender, to deliver to their investors. So that way, the modeling side of it looks great, it feels great, it's easy to read, it's easy to glean insights from, easy to have conversations about. I can't tell you how many models we get sent by people that there's no formatting in it. There's no
Mm.
clarity. Everything's kind of all over the place. It's really hard to audit. So we come in and we clean that up and make it easy to present. And then on the actual uh, like deck side of things, people bring us in to create a more formal deck to give to their lender, or create a more formal deck to give to their investors. So it pulls those insights out of the model, but then we'll also go and research the markets where they're targeting acquisition opportunities, and we'll put in rent comps, we'll put in sales comps, we'll put in market context, and really frame their deal in a easy to digest way that makes it just easier to have conversations about.
Spencer, what I'm hearing you say, and correct me if I'm wrong, but I'm hearing you say what you do and what you focus on is really taking the numbers, right? Taking that model,
Mhm.
that analysis, and really repackaging it so that you understand the story and that you can clearly convey that story based on the numbers, then confirming that based on the marketplace and the opportunities and what you see, and then being able to kind of confirm that or convert that into a pitch deck so you can share that with lenders, with potential investors, so everyone understands the opportunity. Because I've seen those models too, where it's like it's just a bunch of numbers and formulas, and I can go through every tab, and I still don't know if this is a good deal, right? I mean, obviously there's a investor returns tab somewhere, but sometimes it's really hard to gauge like what any of this is supposed to mean. So if you can take those numbers and help to convey a story and not just making up stuff, but like really understand what the numbers are telling you and where the opportunity is based on those numbers, that could be of huge value for investors. Because I know, no two models are alike, but many of those models do not tell a story. They're just numbers, and they just slap in assumptions. And as I tell people, if you have poor assumptions, it really doesn't matter. I can make any spreadsheet look good. It really comes down to the assumptions. And that's what's going to allow you to understand whether or not a deal is conservative or aggressive, really by understanding, the assumptions that went into that modeling.
We really like to dig into um, new supply entering the marketplace,
Yeah.
and compare that to absorption trends.
Yep.
Absorption just meaning how many of those units are getting leased in the marketplace, in any given month or any given period, and that just helps to give context to the risk surrounding the target acquisition. If you've got 100 unit deal that's, let's say, 97% occupied, but then you've got 1,000 units entering your marketplace that are coming online in the next 6 months or next 12 months. Well, can that market absorb those right away? Is that going to take 12 months for those, new units to get absorbed? Your product's older, so it's probably going to be affected by that. We really like to uh, frame the target acquisition in context of the marketplace because it doesn't operate in a vacuum, right? You're competing against everyone else in your area.
And Spencer, you're talking about taking that guesswork and the BS out of this, right? Like too often people say, "Oh, this is a good market," or the mid. Like I'm a Midwest guy, right? So I
Mhm.
tell people all the time, "Hey, the Midwest doesn't get as high, but it doesn't get as low." But that doesn't mean that we're still not subjected to the same new supply challenges, right? Now it may not be as drastic, but let's take the emotion out of it.
Yeah.
Let's take all those narratives out of it. Let's just stick to facts. And that's what you're talking about. Go and look at the new supply numbers. Like, I don't have to sit here and tell you, hey, this market's better than that market because we don't see as much new supply, or blah, blah, blah. I can pull up the numbers. And that's what you're talking
Right.
about. With that said, where do you go to find that? If somebody wants to go and see the new supply numbers and understand net absorption in their market, like, where do they go to find that information?
Yeah, it's a really good question. There's data sources that you can pull for it. Uh, you can go and pull permits from the county records and uh, understand the new construction that is planned from the new permits. That's a good spot. Um, Oftentimes, the brokers that are active in that marketplace will have already done all of that work, and they're happy to talk about those and talk about the new deals that are coming online because it often means new business for them, right? If they can get a good relationship with a buyer coming into the marketplace, then maybe they get a listing on the back end. So, um, getting plugged in with the brokers is one of the best hacks, not just for data, but also for new deals coming into that area. Um, and then honestly, AI is becoming really incredible with not only the raw data that it's able to pull, but its ability to present it in a nice, clean way that makes it easy to talk about. So we're using AI more and more in our work. I think where I would caution listeners on utilizing AI, and it's getting better, but uh, AI is built to be probabilistic, which just means that it's taking its best guess at the response that it should give to you. So you always have to verify the data and how that data is presented when it comes back from AI. But it's a good it's a good place to start, or a good place to refine your assumptions and get more information.
Spencer, I love that you gave kind of three ways, not just specific sources, but three ways of thinking about this, right?
Yeah.
One is going directly to the source. In this case, going to the county website and just literally pulling the permits themselves. So that's really that firsthand research and just digging in and going. The second is finding that person who should have that information, right? Who's the best source? Brokers. Brokers are the ones who are trying to make this deal happen. This is probably a question they're going to get often. It also gives you a chance to build and deepen a relationship with that individual. So going to a broker makes great sense. And then third is leveraging technology like AI. So go to AI, see what they can pull, but recognize there's some limitations in what they have because they're focused on probability, not necessarily clear facts. Usually they will cite their resources, or cite their sources, but I've caught AI being completely wrong and missing basic math questions before. So you
Yeah.
definitely want to check your sources there. But really great tips there. Hey, we were talking before about kind of, really sounds like the folks who reach out to you are those who are looking to scale. They've maybe done some deals as either JVs or syndication deals, but now they're really looking to scale and professionalize their business.
Yeah.
What's the biggest mistake you see operators make at that stage?
I think it's making the assumption that what got you to where you are right now will get you to the next level.
Hmm.
I think we are only as smart as the smartest people around us, and we're glad to help people level up in their business. Right, one operator that just came to us that we're working with now, he has done probably upwards of 300 individual syndications, and now he's looking to do his first fund. Um, and really great syndicator in his market, really good in the fix and flip space. Um, but doesn't have a lot of intel around funds. And so he sent us his fund formation documents, and asked us to read through it. And uh, definitely some language in his fund formation documents that would put him at risk, that would put his investors at risk. And so we went through and we abstracted those documents and called out those risk items. And now he's having some really productive conversations with his attorney to make sure that those risks are mitigated for him and his parties.
I love it, man. So really, it sounds like you really touch on a number of areas, right? If you're looking at fund formation documents, I mean, that's more on the legal side, right? And not saying that you guys are attorneys, but you obviously are weighing in on that risk perspective. You're
We
helping
never
with people.
give legal advice. We never give
Yeah.
formal financial advice, but we do help call out risks to people, so that
Yeah.
way they can have informed conversations with their attorneys or their CPAs and help them along their way.
Yeah. I think it's helpful, right, to understand it. When we talk about the fractional analyst, it's very easy to think about it from a pure deal analysis perspective, but it sounds like you guys are really doing more some CFO and CMO fractional services. Is that a fair way to think about it?
Yeah, absolutely. I mean, I started calling it the fractional analyst because that's the world that I grew up in
Yeah.
professionally is as an analyst, and it's been a fun way to make it stick. But we really do like people to think of us as your professional real estate consultant, right? You'll come to us to get set up in your back office, to make sure that risks are mitigated, that your presentations and your deliverables are in a good professional spot to have productive conversations with key stakeholders.
Who's an ideal client for you?
Typically it's those clients that are in the 50 to 250 million assets under management range. We'll work with anybody. Our largest client had 2 billion under management when they started with us. They were in the fund closeout phase, so we've helped them with managing those lender and investor contacts and making sure that everybody's taken care of. But yeah, it's typically that 50 to 250 range.
And who is a terrible client for you?
um, I think it's people that aren't serious about getting in the game. That maybe they've gone to a mastermind or they've attended a conference or something, and they're excited. Which, don't get me wrong, that excitement is amazing. It's great energy that pushes you in the right direction. But if you're not serious about progressing and actually acquiring deals and operating deals, then we're probably not a great fit.
Yeah, what I'm hearing you say, if I'm read between the lines on that, right? Like someone who's more established or really looking to accelerate their business, right? If you got a 50 million in deals, you're making some moves already.
Mhm.
Um, but if you haven't really done deals yet, you probably have more things to figure out first before looking at someone like Spencer and his team just to get that momentum. And part of what I'm hearing you say is you want to know what you're solving for. And you may not be necessarily like the person who helps someone do their first syndication deal, but after you've done a couple and you understand kind of those pain points, that's where it might be a great fit to say, okay, hey, you know what? I know what we do well. I know what's holding us back from doing more. let me go find somebody who can help. It's not to say you can't partner with somebody on their first syndication deal, but I think for some people, you've got to go and get a couple wins and then figure out how do you pivot and adjust and, and retool and just continue to innovate so that you can see the success that you are looking to get in your business. Any thoughts on that?
I mean, that's absolutely right. And
Yeah,
like, we will consult with anybody, that wants to hire us as consultants. We don't mind that. But what we do want to do is make sure that anybody that is coming into our ecosystem, that they feel like they have a high probability of success by working with us, and that just tends to not be people that haven't gotten into it yet. We do have pretty robust education resources. We maintain a regular blog at thefractionalanalyst.com. We post on our personal and company LinkedIn pages. So anybody that's looking for education that is trying to figure out kind of best next steps, we have a lot of stuff there.
I love it. Well, you heard it right there. Check it out. It's thefractionalanalyst.com. You can get more information about Spencer and his team there. Right now, we're going to transition and go to our round of insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmancapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. All right, give me a failure or an apparent failure that sets you up for later success.
Oh man, I've had many of those. I think specifically with clients, I have learned that the best clients that want to work with us are not afraid to take the next steps that get them to where they want to be. And what I mean by that is investing is inherently about risk. It's there's no free lunch in this game, and if you want to scale a portfolio from your first deal, to your next deal and your next deal after that, you're gonna have to get in the weeds. You're gonna have to talk to people. You're gonna need to get well connected with brokers and key players in the marketplace. And we've worked with clients that were not willing to do that, or for one reason or another just felt like they couldn't. And those are tough cases that I wish could have gone differently. Wish things could have gone their way, but the communication just wasn't there. And we've learned a lot from that. We've learned that communicating effectively makes all the difference. If we and the clients can be on the same page as far as what their goals are and how we can assist them in the best way, then we find that the relationship goes a lot smoother.
All right, great stuff there. Give me a digital or mobile resource you recommend for our listeners.
Well, at the beginning of the podcast, I briefly mentioned our PropTech platform, Corecast. Corecast right now is built for the multifamily acquisitions workflow. We've got native underwriting in there. You can also bring your own model into the system. We've got pipeline tracking, contact management, report generation, market research. So there's a lot of good stuff that people can get out of it. That's our version 1 that we just barely released. We're currently underway on version 2. Version 2 is going to be a lot more robust. It's going to be AI forward, supported by our native development. And it'll get more into the transactions process. It'll add on asset management, have a lot of stuff for title and legal. You can upload all of your documents into the system, and we'll have a native AI agent that gives you intelligence about how your deals are doing, both your target opportunities as well as your deals under management. So I'm very excited about that. That should be coming in a couple months.
I love it. Check it out. Give me the book you recommended or gifted the most in the last year.
Ooh, that would definitely have to be The Richest Man in Babylon. There are just some great core concepts from that that have really guided how I view personal finance as well as my business finance.
All right, great book there. Give me a daily habit that helps you stay focused on your goals.
I'd say it's prayer and regular scripture study with my family. So I have my wife and 3 kids. We live here in Orlando, Florida, and definitely staying grounded together through prayer and scripture study helps us to make sure that we accomplish everything that we need to in that day, and stay focused in the day, and then look up and make sure that our vision for where we want to be as a family is moving in the right direction.
Give me your number one insight for scaling with multifamily acquisitions.
I'll give a number 1 and maybe a number 2. I think number 1 is networking. It's getting connected with the right people in the target markets where you want to be. That's the brokers, the property managers, the lenders that are active there, the investors that are active there. Getting the right people in your corner, attorneys and CPAs too. Just getting the right people in your corner makes all the difference. And I think the second thing is getting a robust back office in place, but I'll even caveat that with, don't go so crazy that you get analysis paralysis. Make sure you've got good materials and all that, but just get in the game and scale as you go.
All right, you are based in Orlando. Give us your favorite place to grab a bite to eat.
Ooh, if we're not at Epcot and Disney World, eating some stuff there, then there's this little burger place. They've got a couple locations. It's called BurgerFi. They've got just unreal burgers, great shakes, really good fries. It's hard to beat.
All right, man. Sounds like some great food there. Good times. Spencer, loved our conversation, man. Really appreciate you sharing more about just what it takes on the acquisition side. Yes, it's, everything about analyzing deals, but you talked about making sure the deal's actually a deal, right? Understanding the numbers and telling a proper story and being able to share that story with your lenders, with your investing partners, and really professionalizing what you do. Taking that institutional background and bring it to kind of the smaller operators so that they can scale and grow their portfolio. And that, the work you guys are really doing is filling in that gap. It's helping people professionalize what they're doing. It's also stepping in and being a consultant and being a resource in the areas where they may need some assistance there. Again, for folks that want to learn more, check out the fractionalanalyst.com and connect with Spencer and his team there. Spencer, thanks for being a great guest and coming on Multifamily Insights. We look forward to staying in touch with you, and I hope you have a great day.